Good morning, snipers. I'm back with another education session where we are talking about fake breakouts and how to identify a real breakout and how to position in the trade when you are identifying it. Without further ado, let's get into it. The first step is obviously to look for a higher time frame. Mostly a weekly and a daily would do, and that's where you would identify if there is a breakout that is brewing on a particular stock, and that gives you a confirmation as to what level to look for when you're looking for that breakout on that particular stock. Here, with respect to Amazon, we identified that 189 was the level that we want to look out for that breakout to happen, which obviously 190-170 was very close to being the all-time highs again. You look at that setup here, it looks absolutely wonderful, where you can obviously see a higher high on a daily time frame and a higher low on here as well. So here, once this breaks out, if this higher high kind of breaks out, we are looking for much higher prices on Amazon. That is essentially the breakout that we are looking for on Amazon here. The most important aspect of knowing if it is a false breakout versus a real breakout is understanding the volume patterns going into that level. Drawing that level is not in scope of this video, but I will go over that in a future videos. To understand the volume patterns, I'm not really looking for the daily time frame because the daily time frame is very slow with respect to me trying to enter a trade and it might already break out. So I usually look for volume patterns at around the 5-minute and the 15-minute time frames and try to assess how the breakout is going to occur before it actually happens. The main reason why I do that with respect to the 5-minute and the 15-minute is because when you are playing options, you want to be in a trade right before the breakout happens because the premiums inflate pretty much after the breakout happens and you do not want to chase those premiums. So identifying the breakout before it actually happens to position in the trade is quite important. And I do that with the 5-minute and the 15-minute chart. And I don't really use the 1-minute chart because of the number of fake outs that happen on the 1-minute chart. Here is a recent trade that we have taken on Amazon, which basically yielded us a 10x return on one of our trades, and we have identified and risk managed our trade when there was that fake breakout and also identifying the real breakout before it actually happened. I'll go over with snapshots as to what I was posting on Discord on real time during the market hours and also show the price action as to when we entered and how we were able to capture that move. Keep in mind that there are two executable points that Amazon has provided on the daily time frame. One is the 189 level that we were looking at, and then there is that all-time high level at 190-170. On Monday, this is how Amazon was looking, trying to break out of that 189 level, and we were trying to pounce on that trade idea. At the open, once 189 was broken, this is where we tried to enter into the trade, and that is the alert that I have given on Discord saying that I'm into that 195 calls for 7.5 and trying to see what happens in the market. Obviously, there was a breakout of the 189 level, but then the SPY and QQQ were kind of mixed and were looking a little bit more weaker. And that is the reason why I traded this a little bit more lighter to see how the price action evolves on the market as a whole, and also to be able to size up on the trade once we broke above that 190-170 level where it got rejected in the first 15 minutes of the market. As expected, from our positioning from here to here, Amazon did have a bounce, but then if you realize, we were going into that 191 level with some stale volume. We were not seeing as much buying power that I was trying to expect of it. And that was what was prompting me to be safe, to stay in the position and see what happens at that 191 level, and then try to position into that trade once we start to break out with volume. Yes, the market started to move higher with some nice volume, but then once you see that 191 level was hit, you see that there was that sell volume that popped up, but then there was no real volume on this candle when we hit that 191 level. The volume came in once we hit that 191 and there was that selling, that bearish candle, the bearish engulfing candle that happened there. So that was something that prompted me to say, okay, let's see how the price action kind of evolves and see where the fake out or the breakout kind of happens and then probably position into it. There are obviously two reasons why I kind of stayed in the trade, right? Like one is obviously I had the time. I was positioned in the 7.5 calls, and also the second part was if you look at the daily time frame, we are absolutely looking amazing on the chart. So when I'm trying to position myself on any kind of swings or any kind of positions, I'm always having that daily time frame chart in my mind. But then if I'm looking for that breakout or the breakdown, I'm looking at the 5-minute chart to give me the clues on the volume to let me know if it is a fake breakout, if it is a breakout, or if it is something that I can catch with respect to my option trading. So we did see the reject of that 191 level here in the market with some increasing volume, and after that the market absolutely started getting wrecked down. Now going into Tuesday, we did see that nice buying that was happening on Amazon. I mean, we did gap up 1%, and then like we were trying to go back to that 189 level. But there's something that was holding me back into positioning into Amazon was because there was no real volume that I was seeing going into that 189 level. You clearly see that as the price was advancing, there was no real volume or interest from any traders to get into that trade. So that is partly the reason why I stayed away from that trade, positioned in a trade which had time, and said, let's see if that 189 level kind of breaks, and that is when we'll try to enter into the trade. So we did see that 189 level did not break because that volume was not available for traders to break through with it. But then the next day we did see that Amazon was opening pretty flat, but then the move up was having some nice volume building through. Once we saw that volume come through, that was when we were looking for that breakout of that 189 level, and that is when we positioned into a trade saying this would be the trade that would really break out. We definitely got a sized up position on Amazon with 100 contracts, and we were very, very close to breaking out of that 189 level because we were so confident looking at that volume. This was a masterful trade where we did our volume price action analysis in real time, and that is the most real time data that you can get out of any trading platform, and also position in certain trades in a sized up position to make a lot of money based just on the volume and price. The volume and price is good enough to give you a lot of information in real time to adjust to the price action that's happening in the market, to try to snipe out great wins and position yourself towards success. This is a great chart from Friday where I was talking about this volume price action analysis in real time and how snipers were able to get nice put plays going into a nice downtrend day on Friday, not trying to snipe out the bottoms, or rather trying to play roll downs into playing puts and making a lot of money to the downside in the market as well. I hope this video was informative and helps you with understanding the volume price action analysis. And if you have any questions, do comment below, and like, subscribe, and do give a thumbs up to this video to support this channel.